Our next panel is going to be interesting. It's about leveraging the utility of digital assets. So I thought I would start by talking about how, because at CNN I didn't really cover cryptocurrency or blockchain, anything like that, but I did cover Bitcoin way back in the day. And I started covering Bitcoin because I always kind of covered like the sketchy corners of the web that no one wanted to go near. That was my specialty. And I covered Silk Road. You guys remember Silk Road? And I remember going and saying, there's this site, it's called Silk Road, and people are doing really sketchy things. There's this thing called Bitcoin, and people are buying drugs and, exchanging weapons, and the money is supposedly untraceable. And the next thing you know, we were doing a story and trying to debate with our CNN legal folks if we were allowed to follow someone to the post office to pick up their drugs that they had bought on Silk Road. It was a whole very interesting debate we internally had. The many times I was on the phone with legal at CNN, which I wasn't doing my job right if I was not on the phone with legal at CNN at least once a month. They were great. They always kept me out of trouble and out of jail. And, it was really, really fascinating because I think digital assets had this whole other connotation for money laundering, and you didn't take it seriously. It was for the kind of the darkest corners of the web. And it wasn't also long after. I remember I interviewed Ross Ulbricht. They found out that Ross Ulbricht was the founder of Silk Road. And he was taken in, and I interviewed his parents before the trial and sat across from them as they pleaded to have their son have a more lenient sentence. And I was in the courtroom. I remember it was just this astounding moment for the internet, I think, and kind of for what this represented, where they sentenced him to life in prison. And that was a really, I would say, interesting moment. And I think, as I said before, it was, looking at Bitcoin and looking at all those connotations around it. Now, fast forward all these years later, it's kind of all the rage. And anyone who's smart and paying attention is looking at cryptocurrency, looking at looking at digital assets in a completely different light. I always kind of wonder what would happen if Silk Road were around today in a different form, or if it had happened today, like what his sentence would be. I think it's funny, Ross's mother reached out recently. I think they're trying to raise money to get her son out of prison. Just the conversation in general has changed, but the conversation around digital assets is completely different. There's so much legitimacy there. Everyone's paying attention to it. Major institutional companies see it as a huge area of growth, a huge asset, and real companies have real legitimacy behind it. So we're going to learn a lot about it in this next panel today. As I mentioned, it's called Leveraging the Utility of Digital Assets. I don't think they're going to be talking about Silk Road. I just thought that was kind of like a fun anecdote. This has really nothing to do with Silk Road. But I do think sometimes, internet and innovation, it starts in these weird dark corners and ends up, changing the world. So our moderator today is Jon Najarian. He is the co-founder of Najarian Advisors, and we have a really interesting group of people. It's a 40-minute panel, so you're going to hear a lot from a lot of really interesting people. So let's bring them on out.
I'm delighted to be here with what I think is going to be a great panel. And so let me introduce them quickly. Adam White is the Chief Operating Officer of Bakkt. This is the Intercontinental Exchange.
That's right.
The ICE, NYSE. This is a digital asset exchange that is going to be trading any time now. And you guys know how regulators are, so we won't waste our time asking Adam when, but it will be coming out very soon, and it should be just a game changer in the space. So congratulations, Adam. Right next to, actually, I've got Dan Morehead. Dan is the Chief Executive Officer of Pantera Capital, one of the, if not the largest digital asset funds that has been around for several years, and delighted to have you.
Thank you.
We've got Perianne Boring. She's founder and president of the Chamber of Digital Commerce. Spends an awful lot of time on regulations, lobbying, and trying to get more understanding
of the
space.
policy community, yes.
Policy, yes. We've got Jor Law. He's the co-founder of Verify Investor, and he was in charge of primary issuance over at tZERO. That's Jor Law. And lastly, Dr. Donald Basile. He is the founder and chief executive officer of Monsoon blockchain. So with that said, thank you very much, panel. Let's dive right into it. Thank you. Thank you. Wow, I didn't expect applause just right at the top, but thank you.
Can we go home now? Yeah.
So obviously there's a lot of speculation on the price of Bitcoin and things like that. Just to throw it out, if I could, to you, Dan, are people missing the point if they're just looking and talking about Bitcoin all the time as far as digital assets?
Well, I agree. I think the focus on the minute-to-minute price changes is not the right focus. This is a multi-decade transition, and blockchain is basically like early-stage venture, but you have a real-time price feed, and that leads to some pretty manic behavior. And if you ever zoom back out on the price graph, over 18 months, it's always up. But people get focused on the last 18 hours or 18 minutes or 18 milliseconds. And so that's the perspective we're trying to have with our LPs, to look out 3, 4, 5 years like you would on venture, rather than thinking you're trading dollar yen.
The price is not a great indicator of what's actually happening in this space. Look at the jobs that are being created. Look at the different companies that are getting involved, from the IBMs and the Microsoft, the Cisco, the banks of the world. All those are positive indicators acknowledging the importance of this technology. Look at the different activities from government sponsors around the world, what's happening in Singapore, all throughout the European Union and the United Kingdom. Those are much better indicators for what the future of this ecosystem looks like, where the price is a very narrow view into what's actually happening under the covers.
Well, so speaking of, since you jumped right in on that, Perianne, how about when somebody like Mark Zuckerberg declares that he's getting involved and wants to use a digital asset for payments, processing, all the rest on Facebook, the largest platform in the world, whether it's WhatsApp, Facebook, Instagram. When you've got something that large embracing digital assets, to your point about it's about jobs, it's about creation of ecosystems and everything else that builds around that. Can you speak to that a little bit?
It's great to see the largest companies in the world starting to embrace blockchain technology. There's a lot of debate in the community versus public and private networks, permissioned versus permissionless. It's all going towards blockchain and crypto at the end of the day. So these are great indicators. It's great to see Facebook is getting involved. There'll be many others, and I would bet over the next 6, 12, 18 months, 5 years, 10 years, you'll see all the Fortune 500s over time starting to roll out their work in this space.
So it's not just going to be Jamie Dimon and Mark Zuckerberg.
There's many more.
And Starbucks and tZERO, for instance, Jor, with Overstock.com, they were one of the first major retailers taking digital asset, in this case Bitcoin, for payments on their Overstock.com. So Patrick Byrne was a visionary for that. You were involved as the head of issuance over there at tZERO, and now with Verify Investor. What would you say to, whether it's a Jamie Dimon or Zuckerberg getting involved in the space as well?
I think it's important just because it shows that serious companies are looking at the space, and that isn't something that just happened recently. For the last few years, the last couple of years, you've actually had serious companies looking and researching in this space, even though they hadn't maybe pulled the trigger yet. It's already been there in R&D. And if you look at a company like Overstock, and tZERO is kind of one manifestation of their blockchain portfolio, Overstock and through its subsidiary Medici, they're actually kind of invested heavily within blockchain in many areas within blockchain. So I think it's good to get real companies that are recognizing how blockchain could help their business. It won't be every business that needs it, that's going to utilize it, but it certainly will be something that impacts pretty much anybody in the space in one way or another.
Okay. Dr. Basile, Monsoon blockchain. Tell us a little bit about what Monsoon is working on right now and how it's using the blockchain to basically grow its business with what you guys are offering right now and the offerings that you've done to fund it to this point?
Yeah, I think what we recognized and is increasingly done, as brought up in Milken last week as well, is that digital data is value. Your data is your value. And so how are you going to basically monetize that value now today? You mentioned Mr. Zuckerberg, an absolute genius. He monetizes data probably better than anyone else in the world. All his data is free and he basically makes billions off it. But how will you monetize that data? How is it possible? And that data, just to give you a perspective, when I did my first storage company, went public back in 06 and Fusion.io, became a multi-billion-dollar company, but we had less than 0.1 zettabytes, a tenth of a zettabyte in the world. Today we have tens of zettabytes. A zettabyte's a trillion gigabytes. And that's going to be hundreds of zettabytes within 5 years. All this data is out there. It's all about your video, your image, and how do you then harness that data and turn it into something valuable? And so that's where we're applying the blockchain. We're applying the blockchain first and foremost for the enterprises. How do the enterprises take these data sets, which have to be monetized across the clouds, run algorithms on them, AI and so forth, and produce useful results for their business? They need a system to go do that. And that's what the Monsoon system allows them to do, to manage that. So think about it like oil out of the ground. You can't do anything with oil. It has to be refined, it has to be piped, it has to be moved. Blockchain, Monsoon blockchain is that infrastructure. It lets you move it, pipe it, refine it, and get value out of that so you can use it to fuel your business. More generally, we look at data for the individual. And this is where your comment earlier about getting involved in that with Zuckerberg's doing Facebook is how do you as an individual extract value for your data? And this is where I think the other massive use of the blockchain will be, which is that data asset you have will be digitized, and then you can sell it and control it via the blockchain so that you can get value out of that asset. And I think there's numerous companies, just met one out in the hall, an interesting company, that's allowing you to go ahead and do that. And so Monsoon also provides infrastructure to allow that to happen as well, the movement of that data.
Adam, can digital assets go mainstream without becoming centralized? I mean, you guys are not going to be a decentralized platform. You're a very centralized platform.
Yeah, absolutely. There are parts of the tech stack that benefit from being centralized. I think liquidity begets liquidity is a great example. And when you build a centralized exchange, it tends to be more efficient, attract greater participants, you get all the benefits because of that. That doesn't mean the core technology underlying that asset you're trading has to be centralized itself. So Bitcoin, Ethereum are great examples of kind of decentralized permissionless technologies, of which you can take a token of that and use on a centralized service to solve a problem. What attracts me to Bakkt and what I think a lot of folks on this panel are kind of working on is not just building the infrastructure, but also helping provide the utility. So at the end of the day, why are people investing and trading and reading headlines around the price of crypto? It's because there's this inherent belief that people are going to use it to solve a real problem one day. It's our belief, and mine personally, that problem they're solving, they will most likely never know they're using cryptocurrency. It should be abstracted away in the same way that when I send an email, I have no idea how SMTP, Simple Mail Transfer Protocol, the actual protocol that governs email, works. I don't need to. I just know that I'm able to send information one-on-one very simply. That's a lot of what Bakkt and I think others are doing or working on as well.
I agree with that. I think the user interface for blockchain and crypto networks still has a lot of improvement. It'll be interesting. I'm really looking forward to seeing Bakkt launch soon. It's certainly a worthwhile thing to focus on today. But this is a problem we've seen with other technologies. Look at the car. It's regulated. We all have a license. But you don't necessarily have to know how it fully works under the hood, where a lot of times when people start trying to get their arms around Bitcoin and cryptocurrency and blockchain technology, they're not really understanding it because it requires a high degree of technical expertise to be able to do so. But really what we need are systems that are usable for the mainstream. And we're not quite there yet.
Dan, would you say that obviously Pantera has grown dramatically, has put up some astounding numbers. When you guys, obviously up until this point, you're trading on decentralized markets around the world in multiple time zones and perhaps even running a 24-hour clock. First of all, do you run 24? Are you 24/7?
Oh, unfortunately, it's 24 times 365. It never stops.
24, 365. As far as a decentralized platform like Bakkt, like eRIS might become in Chicago, I think most of the people in the audience know this, but Virtu, so Vinny Viola's company, the high-frequency trading firm, along with I think Cumberland Advisors and TD Ameritrade are working on this and probably running into the same problems that Adam has run into as far as when will the regulator approve. But is it more important to you guys to be able to deploy capital effectively to have a decentralized market?
Well, I think that's actually a great way to say it, is that our job is to make returns for our LPs. We're not religious about it. We're not like everything has to be decentralized, because there are some things that are very effectively done decentralized, like Bitcoin and Ethereum, and then centralized exchanges are way better today. 0x or other ones in the future might be the dominant exchanges in the long run, but today centralized exchanges are more efficient. And I wanted to share one anecdote on your first question on Facebook's potential entry. I think it's great for the blockchain community. And there's some angst that, it might be competitive with, some of the existing blockchains. And the way I think about it is blockchain's in a really primordial era. Like, we're in just the basic, tiny little mammals running around, when the big T-Rexes, all the data monopolists and all the payments monopolists still control the earth, right? And so we need more blockchains to evolve and develop cool features that help consumers do things better, faster, and cheaper. And in 10 years, those blockchains will start to try and kill each other. But right now, it's great to have a lot of them.
If I could, Mr. Lohr, would you say that the same question to you, as far as when you were, and you're still a consultant and working with tZERO, even though that's not your primary job anymore, would you say that an exchange like that should prosper because of exactly what Dan was talking about?
Yeah, no, I think that, there's always this debate of centralized and decentralized, and I think it's a little bit unfortunate, because I think it's, there's the concept of decentralization as a technology and decentralization as an ideology. And I think sometimes people have kind of conflated the two of them. You look at someone like tZERO, and they've developed a technology to run a secondary exchange that is centralized. They've also developed a technology to run a secondary exchange that is decentralized to some degree, right? A lot of people talk about decentralized exchanges, but in most cases, they're decentralized parties participating in a centralized exchange today. So tZERO has that technology, but for better or worse, a few things, right? One is it's easier for regulators to control a centralized party. It's easier for technology to kind of get lifted off the ground with centralized parties, kind of shepherding it forward and things like that. So there's certain advantages of centralization, I think, that are probably necessary today before we can get to a decentralized future, which might be better and good, but it might not be. Society, before it became centralized and trust, we tried decentralized, right? When we were all humans, we were probably all decentralized, and then someone at some point said, well, let's band together and let's form a tribe or something, and you had someone kind of lead and preside over them. And over time, people found that, even today, most of us will choose convenience over and loss of some control for convenience. And I don't think you'll ever see a world where everything is decentralized, because I don't think that's what actually humans really want.
Dr. Basile, where are you actually seeing utility in blockchain right now? I mean, you guys are trying to use that, trying to exploit that, whether it's for instance, paying for cloud. If somebody's coming in through AWS and you can route them to a cheaper or better, more effective use of their cash through a different platform, are you seeing that sort of utility?
Yeah, let me say a couple things on where we see it. One is payments, as you say. So payments is a great area to reduce the friction of payments. Whether it be in a payment system like ours, where you're basically using our blockchain-based payment system for forming your smart contracts and fulfilling those smart contracts. It reduces the friction, the overhead that exists in the system today. Let's go to the consumer side of expanding that. We may use Venmo, we use PayPal, we use a credit card. You have 3%, 6% charges, $1.50 costs. The friction that exists in the existing system is very high. And therefore, the blockchain-based payment systems can reduce that friction or even eliminate it, which is a huge barrier to use. So within what I say, an open-closed system, to Jor's point, our system is open in that anybody can join the system, maybe become a provider or a consumer of the system, because the blockchain establishes that trust and smart contract. But inside the system, we have a number of trusted nodes, a form of centralization, because just like the internet itself, You and I can't put up a DNS name server and route anybody where we want in the world. That would ruin it. So we shouldn't be able to get into a system and ruin the routing within it. So there's an element of somewhat centralization and then decentralization for access. So that's the other part we see the blockchain allowing that decentralization of access to occur. So we have the payment side and just the decentralized access of trust. Those are the two big areas we're leveraging it.
Anybody else to the panel? Where are you seeing the best utility for blockchain technology right now?
I'll follow that. I think, so we spend a lot of time thinking about payments. Starbucks is kind of one of our core partners as we're getting ready to work on launching a payments service for them. What we ask ourselves is, how is this product either 10x better or enable something that couldn't have been enabled before? So from the consumer side, something that's 10x better is receiving digitally native payments from anyone, anywhere inside the world with effectively no cost. That is an incredibly powerful thing for a merchant. From the consumer side, though, I'm not sure if it's 10x better to buy my cup of coffee with Bitcoin than it is with a credit card. It's certainly interesting. There are other applications, though, of digital payments like micropayments or real-time streaming payments that you just can't do with kind of centralized or current payment models. So if I want to watch per minute on Netflix rather than doing a subscription per month, theoretically I could use a token that every 10 seconds just does a metered payment, and whenever I cut that stream off, then I stop paying for it. So we spent a lot of time thinking about what's new, what's novel, what's better. I think we also spend a fair amount of time thinking about tokenization. That one of the big trends to us is not just stable coins, it's not just security tokens, it's at the meta level, which is this idea of tokenizing any real or digital asset. And by doing that, creating greater liquidity, greater availability. That's, I think, a really interesting space as well.
The area I think that it already has incredible utilities in the developing world. People talk about there's 4 billion people on Earth that are unbanked. To me, that's like calling them unlandlined. They didn't get a landline, they're not getting a bank, they're going straight to a mobile money solution. And Bitcoin or other blockchains are the way to route money around, and especially when you cross a border, because crossing a border, even from a sophisticated country like the US to the UK, it slows way down and gets really expensive. Whereas, as Adam said, with blockchain, you can send it essentially instantaneously, essentially for free. And so the cross-border money movement firms have been very successful. We just sold a company called Coins.ph in the Philippines. They have 1 out of every 10 adults in the country as a client. That's legit, that's real.
I'll throw 2 more out there where we're seeing members of the chamber innovate. One is in identity. A ton of companies really looking to leverage blockchain to verify and authenticate identity, a huge problem across the internet today. The second is in supply chain. Some of the big enterprises are making a lot of success, IBM really being at the forefront of that, working with Walmart and TradeLens and Maersk in terms of being able to track the ownership of products all the way from manufacture to retail is a use case that we're already seeing deployed.
Perianne, when you're working with the chamber and you're talking to policymakers, let's say, and you're trying to direct them, when we came out on the stage, people the nice introduction mentioned Silk Road, which is what a lot of people talk about when they first talk about digital assets. They talk about Ross Ulbricht. They talk about how, oh, this is just a way to move dark money. This is a way to fund bad things. How much of an impediment is that for you when you're talking to these policymakers to get beyond that?
Yeah, it's a great question. And when we launched the Chamber of Digital Commerce 5 years ago, it was in 2014. So we were coming off the heels of all of those scandals from 2013, from Silk Road, where people were buying and selling illegal drugs with Bitcoin, and then Mt. Gox, this massive, one of the largest bankruptcies in the history of Japan, where they lost over $500 million worth of consumers' Bitcoins lost. Big black eye for the industry. And so in working with policymakers and also just the public in general, back then, most people had no idea what blockchain was. If they did, the only thing they knew about it was this thing called Bitcoin. The only thing they knew about Bitcoin is that people were buying illegal drugs with it online. So being able to take kind of that moment where we were in this space and to really help make the case for the importance of blockchain technology is a journey we've been on for the past 5 years, and we've made a lot of progress. One of the first things we did when we launched the chamber was establish an initiative called the Blockchain Alliance, where we work directly directly with law enforcement. So for those who do have concerns about this technology being used for illicit purposes, we've gone on and have trained law enforcement in the track and trace capabilities that Bitcoin provides and answer all the questions and concerns that they have to make sure they have the resources they need to do as in their role as law enforcement. Today, we've evolved quite a bit from that. So in terms of working with the policy community and giving them those types of tools, we've been able to turn a lot of people around. Some examples of this is today we now have a congressional blockchain caucus. So before we launched the chamber, if you guys remember, we had a member of the Senate who called for a ban on Bitcoin. He asked Janet Yellen in her semi-annual address to Congress if she would ban Bitcoin, and she said no. We don't have jurisdiction over Bitcoin, but that was the conversation we were having on Capitol Hill 5-6 years ago. Today we have a congressional blockchain caucus, and we have 20 members of Congress who have joined, and their mission is to promote education and to support the blockchain ecosystem in the halls of Congress. That's a complete 180. We also have all sorts of champions and advocates all throughout the agencies. At the CFTC, the chairman, John Carlo, has said blockchain is in the national interest of the future of the United States of America. We have Hester Peirce at the SEC, who has now become crypto mama and is a big public advocate for this space. So we're making a lot of progress in terms of helping people understand the importance of this technology, but our job doesn't stop there. We still have a long ways to go.
I was with a very active and extremely large young trader who trades in the hundreds of millions of dollars on these exchanges. He basically works about 6 different exchanges. I was with him today out by the pool as we were talking about this. And he trades on about 6 different exchanges, and he runs his algorithms, so I guess he's a competitor to Dan and Pantera, but there's lots of competitors out there. When he focuses in and basically says there are probably 10 exchanges that he trusts enough to trade on with his capital that he's deploying for himself. He has a small group of investors, but it's mainly his capital. And he says, but really of those, I trade on 6 of the 10, and yet there are hundreds of exchanges out there. So my question to all of you guys is, the inevitable, I'm not going to say consolidation, because I don't believe it's going to be a consolidation. I think it's going to be death for hundreds of those exchanges, probably very quickly. And these 2 guys, both Adam and Jor, are probably very much at the center of that with what they have done as far as, once tZERO is up and running and once Bakkt is running and perhaps eRIS, I think that puts a lot of those other players just out of business, in my mind. But my question, I guess, to you guys is not so much consolidation, but once you get rid of a lot of these peripheral exchanges and so forth, do you concentrate and get more liquidity then in the survivors? Because it would seem logical to me that you would.
Yeah, I'll take that first. I think we'll see an aggregation of liquidity, certainly, but I think it's going to come less from consolidation. It's going to come more from institutional capital that's been largely waiting on the sidelines for robust, regulated, trusted, centralized exchanges to come online. And this is exactly the role Bakkt is hoping to play. Bakkt itself is not an exchange. Bakkt is a custodian. So what we allow customers to do is deposit and withdraw crypto to us. We have an internal ledger that then a centralized regulated exchange can look to for customer balances and facilitate trading. The first exchange we're doing that is with a CFTC federally regulated futures exchange called ICE Futures. But our intention, our plan is to go out there and do that for any number of other centralized regulated exchanges. And the idea is that will bring that infrastructure, that trust, that accessibility and availability to all the institutional capital that's waiting on the sidelines, that's just not willing to trade on the offshore unregulated exchanges, which we saw yesterday, another $40 million hacking of one of the most liquid, an exchange called Binance, that we tend not to use the word exchange, because exchange with a capital E is a regulated title. These are cash markets, and they've played an important role in the development of the space, but it's our personal belief that the next wave of growth here is going to come from the regulated exchanges that are now starting to enter the space.
Yeah, I think, when you look at who trades now, it's largely kind of specialty funds and kind of wealthy individuals that are trading. But when you're institutional and you have fiduciary duties to kind of make big big bets, you need one to trust kind of the infrastructure that you're trading on, and these random exchanges that are just offshore, unregulated, undercapitalized. You don't know how they have their operations. They're just not trustworthy enough for institutions to depend on. The second thing you need also is it's great to have this system, but if you don't have product that's interesting, there's probably not going to be much investment or reinvestment in liquidity as well. So what we'll also need to see is that the institutions will bring quality products that other institutions are interested in trading, because a lot of the crypto assets are available for investment or trading. They're not of like institutional grade investment quality.
All right. What about, for instance, there's a recent SEC no action letter on TK Jets, which is a utility token that is out there.
Not a security, in case that wasn't clear to begin with.
Yes. If you want to, Perianne, what are your thoughts on that, on this no action letter? Because, that's a pretty big deal when the SEC issues that for a statement on something that they've basically pushed back very hard against some of these other ICOs and some of those sorts of things.
Right. So Turnkey Jet, the no action letter that was issued around that project, Turnkey Jet was such an odd company to use as the first no action letter for the token space, because nobody in anybody's mind would have ever considered that to be a security. We didn't need the no action letter to come to that conclusion. The no action letter was also coupled with a framework that was issued by the staff at the SEC. Those two pieces, those two documents together, one moved the ball forward in some respects, but at the end of the day, did very little to establish greater clarity for companies that are operating in the token space. So the framework and the no action letter together put on paper the Hinman speech. So Hinman gave a speech. Director Hinman talked about the mutability, and that a platform could be launched through where the tokens could be a security or operating under securities laws, and then over time they would be mutable, and that they would, once they become fully decentralized and meet other frameworks, then they would no longer be regulated by the SEC as a security. So it took the Hinman speech and put it on paper. So that was a step forward. But it also then looked at many other factors of when a project would be considered a security or not. So we've been using the Howey test, which has 3 or 4 prongs that a token would be looked at, and they've basically extrapolated that into more than 60 different items, and one of them being the secondary markets was probably the most important one. So we issued a blog post last week that really put our thoughts and our legal team's thoughts down in terms of what did we accomplish here with these 2 documents and what work still needs to be done, and there's a lot. You can look that up on our website. But again, it's some parts, the mutability of the tokens, that was an important part, but we still have a long way to go in getting the clarity for token sponsors and token trading platforms to be able to operate in a compliant manner.
Yeah, I would second what she said. I'm a corporate securities attorney. Very excited to see that there was a no action letter until I read it. And then and after I read it, I realized I didn't really care to reread it or memorize it, or there were so few takeaways from that because it largely wasn't very helpful. The framework, I think, was more helpful simply because it did memorialize concepts that they had talked about in speeches and things like that. It gave questions for, I think, lay people who maybe are not as sophisticated in securities laws. They could read the framework and see many more questions that help them think about how decentralized they are or not. But the framework created as many questions as it did give answers.
Did it give you more hope, Dr. Basile?
What we had to do, actually, it gives me some hope, but what we had to do so far is we had to create 2 tokens. We had to create a token which is a utility for the use inside of our network. And so hopefully that will be treated as airline miles. It'll be treated as the insides of gaming systems that have existed for decades and allow people to go ahead and move things friction-free and really tax-free within that enterprise until it's converted back out. But at the same time, we did some pre-sale activity, not an actual offering, over in Asia. And to do that, we said we have to have a security type thing. So we had to create a security token, not having this action letter in place, and so not saying that the one could mutate into the other. So right now it's complicated. I think that for all the folks looking at building inside their ecosystems, the things that already exist today, airline reward programs, gaming reward programs, they're trying to figure out how to do that. At the same time, you have this need for capital, this desire for capital, and these things like ICOs, IEOs, STOs out there to do it. And today, it's a split area. We hope at least that there's a clear boundary built around what is a utility, so they can be used inside these networks, and then a different boundary over time over what you used for the raising of capital. We don't think it exists yet.
Since you brought up IEOs, what do you think of IEOs replacing STOs and ICOs? I mean, do you think that is, to the whole panel, do you guys think that that's going to be something that that will be a replacement for any of those other types of offerings, the IEOs?
I'll go very quickly. What we're seeing now is the institutions, in the sense of the banks, the larger banks and so forth, getting into the capital raising game. And so as they get in there, that's a good thing. Because whether they decide to make it an IEO like an IPO used to be, or they do it in some sort of placement, they'll bring over the institutional investors and the regulation of the market properly. So I'm not sure what term will be there, but I think it's a good thing to see the movement of essentially the institutional players into the market in the capital raising game.
Yeah. I have sometimes controversial views on this. A lot of my peers that are corporate securities attorneys, they're very anti-IEO because I think they see it as a continuation of the unregulated ICO space. But from a conceptual matter, if you have someone that effectively is conducting an initial public offering through an IEO process, through an exchange that is not participating as an underwriter, as an exchange, then it's just a funding vehicle that exists today, in the non-blockchain space as well. And that, I think, should be fine, right? It's a matter of having a good underwriter with the proper licenses, doing this initial public offering effectively just happens to be, listed on the exchange. No different than if you took a securities today, IPO'd it, and it went out on NASDAQ, right? So if you had the similar concepts kind of done in the correct way, I think the IEO should be fine. What I think you're seeing a lot of IEOs now is a continuation of ICOs, and that's not okay.
I'll just add to that. I think what I like most around ICOs, STOs, and IEOs is just the resiliency of the space. So if you rewind 2 years ago, this idea of an ICO was very foreign. People were still, what do we call it? And when people realized you can't raise non-dilutive capital from anonymous investors, and that kind of got shut down, you saw people shift to security token offerings. And then when people realized, hey, it's actually pretty difficult and a bit slow to work through the regulatory newness of this product, you've now seen an IEO. And to me, when I take a step back, it gives me a lot of hope and confidence that we're probably not going to figure out the killer use case within the next month or maybe even the next year. But you see so much grassroots movement of developers and innovators experimenting with this technology that I don't want to speak for the whole panel, but I think a lot of us are up here because we believe that we will see that breakthrough that'll bridge the technology with the regulatory clarity and actually solve a real problem.
Dan, do you guys trade any of the alphabet soup? STOs, IEOs, even initial coin offerings, ICOs?
Yeah, we invest in across the whole spectrum of assets, and I think IEOs are a nice new development, and if they're done properly, they're good. But I think, Adam's point that everyone thinks ICOs were invented 2 years ago, they did their thing and they went away, is wrong. They were invented in 2013, they were just really rare. To start a completely new blockchain, it's just a really rare event. And so they're back to being very rare. We have a fund that only invests in pre-auction ICOs, and we've only invested in 3 things over the last 8 months. And I think that's really the flip side of 2 years ago it was 50 white papers a week, and now we're back to kind of what I would consider normal.
Perianne, is that part of the challenge for you, getting the policy folks up on all of the different, as I said, alphabet soup of these offerings?
So in Washington, one of the biggest problems that this community faces is that we're in an incredibly complex regulatory environment that's evolving in real time. So we've talked about the SEC and applying securities laws to tokens and trying to define what is and what is not a security in the blockchain
By the way,
space.
do you deal with both SEC and CFTC
And then
as
you
well
have
as Congress?
the CFTC, who has said these convertible virtual currencies like Bitcoin are a commodity. And then you have within the Treasury Department, FinCEN, that's regulating these tokens as currency under the AML and the Bank Secrecy Act regulations. And then at IRS, they're being taxed as property. So there's 4 different types of definitions. Then you have this 50-state patchwork. And for companies trying to innovate and bring products to market, there is a lot of overlapping jurisdiction, there's a lack of regulatory clarity, and where you have that inhibits innovation. We believe today what would really move the needle forward for all of us would be to have broader recognition from the highest levels of government within the United States. We've gone on record and we've asked this administration to issue statements that say, very simply, blockchain is an important technology, and we should be doing everything we can to encourage and support the private sector in developing and innovating with blockchain within the United States. Many other developed nations understand the potential promise blockchain can bring, are taking proactive steps to encourage companies to innovate within their borders. They're engaging in open regulatory arbitrage. And where are we in the United States? The only thing we can talk about is enforcement. There's no conversation about what this is going to do, what type of opportunities this is going to bring for technology to the economy. So we've issued what we've called our National Action Plan for blockchain, and we think that's the most impactful thing today is getting recognition from the highest levels of government. And that will move a lot of the friction at the staff level with all the independent regulators, should help get them on the same page and move a lot of these regulatory issues forward.
In our final couple minutes, to each member individually, I'll start with you, Dr. Basile. What would you say is going to be, at least when you put on your vision of the future, what do you think is going to be a catalyst for a market uplift or a market collapse in terms of blockchain right now?
Well, I think the movement of the people into the space pretty much guarantees it's going to be an uplift. Even last week at the Berkshire conference, Warren Buffett said he adopted it as a philosophy of needing blockchain because Bill Gates convinced him. So when all the folks are moving into the space, you're going to have an uplift just by the motion in it. Of course, our area is to make the vision of data come true. So we're going to put the data and the blockchain together and just you create your own future, and therefore it happens.
Yep, I was going to say the same thing. I think just greater adoption by the masses, the technology becoming more pervasive, and people accepting it, understanding it more. And this is true of many things. This is true of internet and computers and everything. You had a period of years where you had some specialty people that knew how to do it, and then over a period of time, the masses came on, and the space really lifted. And I think that it will be the same for blockchain.
With the internet, the Clinton and Gore administration issued a plan to help encourage the commercialization of the internet. We were very successful because of that. So we would like to see this administration take similar steps like they've done with other advanced technologies, including artificial intelligence, 5G communications, and quantum computing.
I think scalability, it's always darkest before the dawn, so everybody's super negative about scalability because Bitcoin and Ethereum only do 7 to 10 transactions per second. There's already some like Ripple that do thousands, and I think within the next few months there's going to be some very eye-popping announcements, including tomorrow one on scalability that'll get Bitcoin blockchain up in the thousands of transactions per second.
I think we'll continue to see kind of native digitalization of value and that begin to rival incumbent payment systems, be it kind of federally run ones like FedWire or ACH, and of course proprietary rails as well.
All right. Well, panel, thank you very much. Folks, you've been listening to Adam White, Chief Operating Officer of Bakkt, Dan Morehead, Chief Executive Officer of Pantera, Perianne Boring with the Chamber of Digital Commerce, Jor Law of Verify Investor, he's the co-founder there, and Dr. Basile, co-founder, Chief Executive Officer, Monsoon. Thank you guys very much. Thank you, audience.
Thank you.